cover my top picks for the year 2026 and what's anticipated to be a strong bull market. So, as I've mentioned in other videos, we have many conditions in the market right now that I believe are conducive to a strong bull market in 2026. Not only an interest rate cut tomorrow, but also the return of quantitative easing starting in January. Now, I pointed out in a video on Thanksgiving, actually, that quantitative tightening was stopping December 1st. So we are now 9 days into that, and we're seeing the market slowly inching back up. So, with that being said, I'm going to cover my top picks for the year 2026 and what I anticipate to be a bull market. So, we want to definitely capitalize off the environment we're going to have because this is like a perfect storm of a setup. And I mean that in a positive way. This is a perfect confluence of events that we don't see all the time. So, to start off with, I'm massively bullish on AI and tech. And I found a new leveraged ETF known as the Direction Daily Technology Bull 3X Shares ETF. Now, this is a triple X leverage ETF based on tech stocks. This one's been around since the others that I trade, like UPRO and TQQQ. And those of you that have followed me for a long time know I'm a huge fan of these. Now, you'll notice this one has far surpassed the returns of TQQQ and UPRO. This is 40,000% all time, which is incredible. Over the last 5 years, up 287.54%. Past 1 year, 36.87, and it's up 52.06% this year. So I actually got some of this in two of my accounts recently, and I'm probably going to do more. The next one I'm very bullish on, AppLovin and some other companies very soon. So so you all know I don't necessarily just directly trade the stock. I also well, I have a like hyper growth strategy. So I don't just trade the stock. I look at the leverage ETF because I want to maximize the upside if I can. Now, this one, you'll notice this chart looks a little bothersome. This is because this had a split already. It ran up so fast because AppLovin has absolutely been on fire this year. So let's look at the underlying first. Let's look at AppLovin stock first. So AppLovin was up $35 a share today. Earnings are coming out in 2 days. So I've actually done some call options on this one. This one I'm very bullish on going into the new year. Now, there's a rule of thumb that you all need to understand because conventional wisdom suggests that when something is at a 52-week high, that you might want to stay away from it. But actually, more often than not, stocks that are at 52-week highs just continue to run up. Whereas if you're chasing a deal, you might think to go into something like SMCI, but SMCI may not have a run up like this, even though it's at a really good low. And I would totally understand wanting to buy a stock like SMCI given the low that it's at right now. So AppLovin has burst onto the scene this year. It's been around about 4 years, over 4 years, but it's really burst onto the scene this year. You can see ever since last November, it's up 112% this year. In 1 year, 111%. And it seems like more, honestly, from August 9th of 2024, it's actually 10x. So the best way to take advantage of the upside on things like that is leveraged ETFs. Now, these work great for upside, but not so great for downside. A lot of us learned that this past November. And some of us also learned that in March and April of this year, too. But it's nice to know that we're still up for the year for the most part. I'm definitely, I'll come out with probably one or two more portfolio updates before the end of the year. And the numbers are looking pretty good overall. I did take some tax loss harvesting by selling out of Yield Max, but that was necessary, and it's necessary to keep the pie growing and keep the game plan honed in. I'm much more towards growth now. Not much dividends. I'm just going to do dividends in one account, like I showed in a prior video. Now, if you all like this, please smash that like button. 2 thumbs way up. Greatly helps the algorithm. So again, with this one, and this is a little deceiving because of the reverse split, but you can see in 1 month here, because this has only been trading since, I guess, April. And it's had a split already. So if we look at the past month, 20% for the past month. Next one I'm very bullish on, Micron Technologies. So we're going to look at here. Micron Let me do the little AI mode here. I said I'm gonna use this in every video from now on. So Micron, and obviously these are all, tech, and AI companies. So this one for the year to date is up 200%. We had a little bit of a pullback in November, so if you all missed that pullback, it was like a blip on a radar. It went fast. But you can see we're back up pretty much to where we were in October. Funny thing is, when you have a growth strategy or a hyper growth strategy, if you pick the right stocks, you're going to accelerate your returns massively. Imagine those of us that picked SMCI or MSTR. If we had just been in these instead, we'd probably have made like 2 or 3 million this year. But these are the things we want to correct going into next year. So obviously, you all know, for every stock, I have a leveraged ETF up my sleeve. So let's go look at MUU. Now, there's one by Granite Shares, and there's one by, I want to say, either Trader or Direction. But I like the Granite Shares one because I'm kind of a little partial to them. They've, been kind to the channel, and they also trade cheaper. So let me do this here. MUU ETF. Okay. So let's see what the AI pulls up. So this is a direction one. I was actually referring to another one that's I picked the Granite Shares one. We'll get into that though. We've got some more. So MUU is the Direction Daily MU bullish 2x leverage ETF, which obviously is based on Micron Technologies. Now, the idea is that when a stock like Micron is up 200%, see this? It's more than 2x. This is a perfect example of what a leverage ETF can do for you in a bull market. And I'm expecting all of this to continue into 2026. I'm expecting a golden age record bull market in 2026 and potentially continuing in 2027 and 2028. Who knows beyond then? But I'm just focused on making as much money as I can in these next 3 years. And I know a lot of you are too. So look at that, 455% over the year to date. If you adjust for past 1 year, it's 256%. And this one just went public. It looks like October 11th, 2024. But it's insane to think that from the beginning of this year, even with this pullback here, that we're up 455%. Now, my next idea is I'm a big fan of the S&P 500 and classic index investing, but I want to take it to the next level in 2025. So I'm looking at not just the 500 companies in the S&P, but I'm looking at harnessing the top 20 or 50 companies in the S&P 500. So believe it or not, there are funds out there that do just that. And what gave me this idea, I started getting random ads for like algorithmic trading that says, "Hey, we beat the S&P 500 because we have an algorithm that basically allocates investments based on the highest momentum stocks in the S&P." And obviously, an ad like that is going to sell you some expensive, program that you don't need. So I say DIY. I'm a DIY kind of guy. I know most of my audience is too. So with that being said, the DIY solution is a fund called TOPT, TOPT. So TOPT, let's introduce this to you all. TOPT is an ETF that trades on the iShares top 20 US stocks in the S&P 500. Let's look at the holdings here real quick. Should we say TOPT holdings? Let's aggregate this here real quick. Okay, so it holds a concentrated portfolio of the 20 largest US companies by market cap within the S&P 500. So this is kind of what we want to achieve. As of early December 2025, the top 10 holdings accounted for approximately 73% of the fund's total assets. The top ones are the usual suspects: Nvidia, Apple, Microsoft, Tesla, Broadcom, Berkshire Hathaway, JP Morgan Chase, Amazon, Eli Lilly, and Alphabet. The sector allocation is pretty heavily weighted towards infotech, followed by financial services and communication services, consumer cyclical, and healthcare. But obviously, the money is in tech. So let's again look at TOPT. Let's look at the chart of it. Okay, so year to date, it's beating the S&P by about 4%. Now, if you want the leverage play, we already know about UPRO. Welcome to Pirate Justin. Anybody else have any comments or concerns, please feel free to comment away and like and subscribe and join Discord. Okay, so with this being said, this one's been around. This is basically brand new since last October. There's all kinds of funds that they're coming out with, folks. It's truly amazing. It's truly a great time to be alive and to be an investor. So 20%, so it's beating the S&P. Now, the next one is a top 50 strategy. Now, I may go over 10, but any number over 10 that I go over is just purely bonus. So XLG is the next one. This is a top 50 S&P ETF. So we're taking, instead of the top 20, it's the top 50 companies. So this one is by Invesco, and this one is also up about 20% for the year. So XLG, let me do the holdings. I love this Google AI. It's phenomenal. And it's so fast too. Okay, top holdings again if you want more of the same. Nvidia, Apple, Microsoft, Amazon. There's some Broadcom, some Alphabet, some Meta, some Google, Tesla, Berkshire. Speaking of Meta, I'll throw this in there. Meta's one I'm also very bullish on. I have about a $900 price target for 2026. So show this one here. We're up only 12% year to date, and that's because of the choppiness here. Now I'm selling puts, as you know. Coach, you ask Coach, hey Coach, what's your leveraged play? We know you don't just buy the stock, right? So METU is my leveraged play on Meta. I've been selling puts on that, and they're assigning at like $33, which is about right where we are. So with that being said, watch this. As Meta stock runs up, this fund could run up to 50, 60, $70 a share. You can see it was over 50 back in February, and 50 seems to be like the resistance level, with the support level being at around 20. But we can't go by technicals for leverage ETFs because they're based on underlying. But anyway, so that's Meta. Now the next one, this is going to be very interesting here. I got one you've all have probably never heard of, SNX, which is a company called TD Synnex. So not to be mistaken with SNL, SNX, TD Synnex Corp. This is their stock here. This is another tech company I'm very bullish on. So this one is up 31.52% year to date, with price targets being between 170 and 180. Let me do a little bit of a brief description here. Description and company bio. We'll just give this, since we're introducing this probably as one that's new to most of you all. So TD SYNNEX is a leading global distributor and solutions aggregator for the IT ecosystem. The company helps its 150,000 customers in over 100 countries maximize the value of their technology investments by connecting them with a wide range of IT products, services, and solutions from a network of 1,500 plus vendors. Core business and offerings operates as a vital link in the tech supply chain, providing distribution, logistics, and integration services. See, these are big. The supply chains in the tech space, these are huge, especially with AI. So on and so forth. Amazon Web Services and Microsoft. We'll read this real quick here. Offers various services to support partners and customers, include logistics, systems integration, and configuration. Company also provides cloud and software services, offering access to major platforms like Amazon Web Services and Microsoft through its Stream One. Okay, so that's that one. Now there's another fund I want to cover. Well, before we get into that, back to the S&P strategy real quick. So if you all didn't like what I was throwing out as far as the leveraged, not leveraged, but the harvesting the top of the S&P, you can also go for 3x of the highest beta stocks of the S&P if you really want to juice it up and max it out. So I'm going to introduce you all to a fund called HIBL, HIBL. It's the high beta S&P 500 stocks. So this one, let's look at this one year to date, because this in a bull market should vastly outperform, and it has, as you see. So I tell you what, scrap those last two and hone in on this one. This is up 65% year to date, with a much better 2026 on the horizon, I presume. So high bill, let's do the holdings real quick, because this is a leveraged ETF. So this is like gold, folks. This is basically 3xing the S&P 500. So let's see here. Sector allocation, IT, financial services, consumer cyclical, industrials, basic materials. As far as holdings that are high beta, obviously NVIDIA, Tesla, AMD, I almost said Tesla, various financial institutions. Due to the nature of the strategy, the specific underlying stocks in the index exchange frequently as beta values are recalculated monthly. So let's do this here real quick. What are the highest beta stocks in the S&P? Just so you all know. And by the way, folks, one of the worst naming conventions or mnemonic conventions that I can think of is Standard and Poor's. Like I've said, why would you want to be Standard and Poor? They should call it, if it were my index, you know what it would be? It would be the UNR. It would be the unconventional and rich, not Standard and Poor. Okay, so here are the top stocks by that are highest beta. Micron Technology, Intel, Tesla, Western Digital, Lam Research, AMD, Nvidia, Coinbase, Robinhood, and United Airlines. And then there's another one too, SPHB. We're gonna go way over 10, but I did say 10. I wanted to at least keep you riveted with that. Okay, so we've discussed AppLovin and Micron. So this is another one here by Invesco. This is same strategy here, but not doing as well. So we covered TECL. Now there's other sector leverage ETFs like DFEN for aerospace and defense, FAS, which is a 3X financial. Oh, and then let me go over this one, SOXL. I think semiconductors are gonna be big also, and really anything AI related, of course. Now, I haven't even covered my AI stocks yet because I've covered them in another video, but I will get into that before we end here. So, SOXL is a 3X semiconductor bull ETF by direction, also. I'm very bullish on this one. This one is up 75% year to date. Over the past year, 64%. Over the past 5 years, 58. So it's very choppy. So it's good to actually trade options on because you all know I don't just hold these. No, for one thing, I'm a growth investor, but I call myself now a hyper growth investor. I'll call it a super hyper growth investor because I don't just buy the stock. I do the leverage ETF, but not only that, I trade options on the leverage ETF to wheel this I wheel in and out of it. I call it coach's wheel strategy. I'm up about 400,000 for the year. If any of you all want to learn how to do that, feel free to book a one-on-one session with me. Um, those are great and they're highly productive. So, with that being said, I'll run through a couple of purely AI plays. So obviously for AI, and I've covered these in another video, so I don't want to belabor the point, but we'll just name obviously CrowdStrike is one of my big ones that I'm very bullish on. So in 2026, and this one's expensive. So again, coach, what's the leverage ETF? You're going to hear me say it over and over. You know, when I pull up a stock, you're going to say, hey, coach, what's your leveraged play for this one? And of course, I have one. It's called Crawl, CRWL. So since CrowdStrike is up 51% year to date, watch what its leveraged play has done. And some of these are so new that the market is really adapting to what investors want. Some of these are so new that they haven't even been out a year. Like this one here. This one came out last November. Year to date, it is up 62.04. So it's not quite capturing everything because it's got that drawdown because these are very volatile stocks. But obviously, there's CrowdStrike. And then obviously we need energy to power AI. I will also, dare I throw this on there, but SMCI is also one of my plays for 2026. Now, SMCI has great products. They just need to get their shit together when it comes to inventorying and turning over, inventory turnover, basically. This is a very volatile stock. This should be on the high beta stock. So it was up to 60. The resistance is about 60 a share. Every time it hits 60, it crashes back down, and the support level is around 30. Sometimes it did test 30 back in April. It even tested 26 back in February. But you can see if we have another period like this, if we can replicate this January and February, if we can replicate what we did last January and February, this will make a lot of us really rich. I don't think we'll replicate that, but I do think at some point they have to beat earnings. So obviously, NVIDIA, we don't need to state the obvious, but we have a couple of companies like Constellation Energy. Constellation Energy. Let me do this real quick. And then my leverage play. I've got a 2X, of course, for Constellation Energy. So CEG is Constellation Energy, but my leverage play is CEGX. So, the largest producer of carbon-free energy in the US has shown robust financial performance in recent years. Net income, 3.75 billion off of revenue of 23.57 billion. So this is all pretty good. So my leverage play is CEGX. So let me do this real quick here. So CEGX, I'm going to introduce you all here. This is by Trader. This was just launched and it's already up 12.52% year to date. So I'm very bullish on this. Let me look at the chart for Constellation Energy before I get too far off topic here. So here's the chart. So we're up 60% year to date, 51.8% over the past year. How about this one? 700% over the past, basically, that's 22, 23, 24. So less than 4 years. That is phenomenal. How about that? 700%. Okay, and then last but not least, we've got, it's called Bloom Energy. And then, of course, I've got a leverage play for that, and that'll be the last one we cover. So we're definitely into bonus time here. Let's see. Commenter says, I work in corporate IT infrastructure and operations. We use CrowdStrike Falcon as our EDR. Yeah, very common in the IT industry. You said HOOY, GPTY, and Chippy are my best performing income holdings. Yeah, we'll have to get back to covering those. I've kind of I'm kind of like NAV erosioned out, so to speak. So maybe I'll look at some of those funds again that you're talking about. But this is pretty much going to be growth and leveraged growth in this one. So, all right, 400% year to date for Bloom Energy. Now watch this one, BEX. BEX is my leveraged play for this one. So BEX 1606, it's dirt cheap. Look at that. And literally, like I said in the video where I covered this one, it just launched. It hasn't even been out a month yet. So with the Fed cutting rates tomorrow, with QE returning, things are looking very, very up for the year 2026. So with that being said, comment away what you all's favorite picks are for the year 2026. Like the video, smash that like button, 2 thumbs way up. Subscribe to my channel, join my Discord, and engage. Talk to us. Everybody, share your ideas for the new year. Thank you all. Take care. Have a great evening. Bye.